Hi, welcome to another episode of Money Script Monday. My name is Brian Manderscheid. I'm very excited for today's presentation as I'm going to share with you what the last 10 years of being an IUL owner has taught me. Now, you may be currently working with a financial professional or may have been pitched Index Universal Life in the past. The goal of this presentation is to share with you my honest feedback and experience of what this policy has done for me, in hopes I'm able to give you enough information so you can make an educated decision on if this is the right policy for you. So today what I want to do is focus on the actual return experience that I've achieved in my policy. I'm going to talk about liquidity, leverage, and arbitrage, and lastly finish up with what matters most. So when I bought this policy, this is the first of two IUL policies I purchased. I was over 10 years ago, I was 28 years old, and the purpose of this was to supplement my retirement accounts and other investment accounts and provide this tax-free income down the road when I decide to retire. Now, I originally, when I looked at the projections, there was a 7% illustrated rate, and that's sort of what I expected. But the actual returns that I've experienced is about 8%, just about, over the last 10 plus years. Now, we've had obviously a good bull market along the way. We've also had some turbulence. And to be able to experience a competitive 8% rate of return without having any of the stock market losses has really been a big surprise along the way. I've also been able to, over that 10 plus years, accumulate over $24,000 of interest earned. By the way, haven't paid any taxes on those gains, as a life insurance policy does grow tax deferred, while also giving you the access to access cash value tax free. So even though we've had some bumps along the way, we had a good bull run in the market, experienced rates of return greater than my expectation. Now recently I celebrated my 10th year anniversary in this policy. I want to share with you some numbers from my annual statement. So this policy, the smaller of the two, I'm paying $450 a month, so $5,400 per year. And even though we had in the beginning of this policy year, we had COVID, the lockdown, the big stock market drop, I was still able to accumulate almost $4,000 of interest, by the way, not paying any taxes on it, and the costs of the policy were under $1,000, which basically allowed me to carry $320,000 of permanent insurance for my family. Currently, I'm in policy year 11, so outside the surrender charge period. Got rid of most of the through the front-loaded policy costs. At this point, there's just a small admin fee, some cost of insurance, so my expenses are less, and hopefully I'll continue to receive high rates of return throughout the policy. So that's the actual returns that I've experienced. Let's next move into the liquidity, leverage, and arbitrage. Now I mentioned that the purpose of this policy was to just accumulate money and down the road when I decide to retire, have this stream of tax-free income. But what I realized is that life happens and that there are dangers that may come your way, but also opportunities. And really, access to capital is key. You may have heard the expression, cash is king. I really think the expression should be liquidity is key, or access to capital is key. And I've been able to, there's a smorgasbord of reasons why I've actually accessed my policy. Again, I'm not taking withdrawals from my policy. I'm merely loaning from the insurance company with my life insurance cash value and death benefit as collateral. By the way, this is an unstructured loan, meaning that there's no credit checks, there's no requirements, there's no prepayment penalties, no required payback periods. I merely just go onto the computer or the app, put how much I want, and in 3 business days the money's wired in my account. By the way, it doesn't show up in my tax returns, there's no income taxes, and I can decide to pay the loan back if I want to, or at my own convenience, or not pay it off and let the loan balance continue to accrue. Now, a few years after I bought the policy, I was able to buy a home. I was a fixer-upper. I had to buy it with an FHA mortgage. I used the policy to help me with the down payment. Along the way, I've also renovated the home, and just recently did a loft addition to add much-needed space for the family, all using the insurance company money. Before the renovations, I was in an FHA mortgage, and I wanted to get out of it, so I did a refinance to conventional mortgage. However, the loan balance, the appraisal, wasn't enough for me to be able to get the new mortgage. So what I had to do is pay down the FHA mortgage, didn't have the capital. So again, I turned to the policy, borrowed from the policy, was able to pay down the FHA mortgage, refinance a conventional mortgage, save $300 to $400 a month, and use that cash flow to pay back the loan from the insurance company. I also had student loans that I paid off, which were not mine. Just a word of advice: never co-sign on someone else's student loans. I learned that advice the hard way. Had cash crunches. My income, my wife's income, they're both variable. We've had some lean months, and we've had high expenses. And I've used the policy to help bridge the gap. When cash flow increases, pay back the loan back to the insurance company. My favorite is buying the dips. Now, in addition to owning an IUL, I am an avid investor, and stock market is volatile and it goes up and down. And when there are big dips in the market, some people panic sell and they lose money. Other people see that as an opportunity. And my favorite example of this was back in March 2020. The COVID lockdown happened and the pandemic. There was about a 35% drop in the S&P 500 over the course of about 3 to 4 weeks. And while most people were scared and they panic sold, I was able to, again, using access to capital, borrow from the life insurance company with my cash value and death benefit as collateral, and buy high quality stocks at a discount, which happened to double in roughly 6 months. So not only did I earn the competitive rate of return on the policy, because the loan balance continues to earn uninterrupted compounded returns, I was also able to get the returns on these other capital purchases, the home, the investments I've been able to accumulate along the way. Now, there is a cost to access capital. For my policy, the current loan rate is 4.2%. It's a variable rate. It's averaged between 4 and 5%. But the way I think of it is, even though it's cost me money to borrow from the insurance company, those borrowed funds continue to earn index returns in the contract, and the index returns have been almost double that of the opportunity cost of the loan, the loan that I borrowed. So essentially, the gains of the policy have covered the loan interest. So we talked about the return experience, liquidity, leverage, and arbitrage. Next, I want to finish up with what matters most. Now, again, why I bought this policy for a supplemental tax-free income stream. My life's changed since I originally bought it. I got married, had 2 beautiful daughters, and what I realized is it's not just about the rates of return or the liquidity. It's about the protection, and that's what matters most. And for me, having the peace of mind to know that no matter what happens is my wife and daughters will always be taken care of. It's my last gift of love to them. So they, even if they're going through a tough time, they'll know that they'll be able to stay in the home that we've been able to raise our kids in, go to the same schools, and can go to college and live their lives knowing that their dad loved them and would do anything for them. That peace of mind has been greater than all these other benefits that I've experienced in the policy. Likewise, taxes. I hate paying taxes, and I'm sure you do too. The benefit of having this policy for me is I've been able to avoid taxes on all the growth, access capital without any income taxes, and down the road when I pass away, there'll be an income tax-free death benefit for my family. And lastly, safety. I mentioned I'm an avid investor, but there are times when the stock market drops, and the average investor tends to buy high and sell low. They panic sell when the stock market drops. For me, having this safe asset that doesn't drop when the stock market drops allows me to take risks in the stock market and even acquire new positions and shares when the stock market drops rather than panic selling, knowing I have this safe asset to rely back on. So that's my experience as an IUL owner for the last 10 years. My question to you is, are these things that you're looking for in your financial plan? Are you looking for competitive rates of return without the stock market drops? Are you looking for access to capital, leverage, liquidity, arbitrage? And are you looking for protection? Is there someone who matters most to you that you want to make sure no matter what they're taken care of if you're gone? Do you hate paying taxes? And are you looking for a safe vehicle to grow your money? If the answer is yes, and if those are things you're looking for, please contact the advisor who sent you this video They can talk to you more about Indexed Universal Life and how it may fit into your complete holistic financial plan. Thank you very much. We'll see you next time.